Hey, what's up, amazing people? Welcome back into my screen, and very shortly we will be breaking down the market for the upcoming week. And best believe that a trade opportunity for us to bank thousands of pips. Yes, we heard that right. A trade opportunity for us to bank thousands of pips. And on this episode, on this segment of my YouTube channel, I'll be bringing you such opportunity on a platter of gold for free, no proprietary information. If you didn't get my name from the intro, my name is Bestman Depre Kelsey Amakri. I'm a Forex trader with over 10 years trading experience, and you're welcome to Traders Advocate, one of the most realistic Forex channel on YouTube. I pride myself to be one of the most realistic Forex trader on YouTube. No replay mode, no hypothetical stuff. You can see I trade my personal accounts, all right, and I also manage account for other people as well. And so best believe once I call out a trade here, best believe I'm also taking that trade. So if I make profits, you make profit. And if I taking a loss, you taking a loss. But the good thing is my losses are way more fewer than my winning trade. I have more winning trades than actual losing trade. I would say I'm right 7 out of 10 times, right? And we'll have a track record. Watch all our videos and see how the market play out. We don't analyze the market after the market has played out. I analyze the market before the market has played, before the market play out, so you get to see the thought process of a profitable forex trader. Not to talk too much, I'm going to start with the S&P 500, then we'll look at other major currency pair, and we'll wrap it up with BTC. All right, so in front of us you have the S&P 500, which is bullish. All right, let me zoom out properly. You have to understand the market moves in a zigzag way. In an uptrend, the market creates higher highs and higher lows. So we have a low, we have a high, we have a higher low. This low is higher than the previous one. We also have a new higher high. This high is higher than the previous high. We also have a higher low, a higher high, a higher low, a new higher high as formed. The market now needs to correct to continue with the trend, which is bullish. The market does not move in a linear fashion. It doesn't move in a straight line. It pushes, it corrects itself, pull back a little bit, pushes up again, pull back, pushes up, pull back, pushes. It needs to pull back. So what I'm trying to say is the S&P 500 needs to pull back, at least to do a retest of fear before to continue with the major trend, right? So for every milestone achieved, investors tend to close position as profits. Hence, a pullback into near support to actually continue before bouncing or reversing to continue with the major trend. So this can be known as expensive, cheap, expensive, cheap, expensive, cheap, expensive. It needs to be cheap so people start buying all the way to the upside. So the S&P 500, what does this mean? It means we can start selling, but we are not sleeping too long on the sword because this is a correction, at least to do a retest of here, or maybe spill a little bit to this downside before actually continuing with the trend. And if I bring up my Fibonacci from 2 cents low, I just realized maybe we can actually pull back for a retest of here before actually blowing all the way to the upside. Now on the daily time frame, pardon me, I have to take this one off. There are too many lines on my screen. Okay, cool. On the daily time frame, you realize we've broken below the intraday trend line. This is the intraday trend line of broken below it. Sorry I didn't tell you guys, I'm a swing trader, so I love doing my analysis from the higher time frame, from the monthly, then I go to the weekly, then on the daily time frame, the daily and the 4 hour time frame is where I come to identify the immediate trend within the major trend. Okay, so this is an immediate trend within the major trend, this guy here, and you can see this immediate trend line has been broken and we are currently pointing down. Last Friday closed bearish. All right, we have on the 5th of June, we had this massive bearish engulfing candle close like this, just telling us a strong selling pressure was coming from here. So pretty much broken below the intraday bearish trend line. So this just confirm the daily time frame, just confirm what the monthly and weekly is telling us, like week this guy actually do for a reversal to the downside. If I'm looking at this more clearly, this is looking like a left shoulder. This is looking like a head. Maybe we might actually play around here a little bit to form a right shoulder. This now becomes the neckline. From prehistorical history, I've come to understand the S&P 500, whenever it wants to reverse, to pull back to near support before actually continue with a trend, it always gives out a reversal sharp pattern, i.e. double top or head and shoulder pattern before actually reversing to continue with the major trend. And if you look at it properly, if you look at previous price action, by assuming, you'll notice we had a double top here. This was a double top before we reverse all the way to the downside. Here we have a triple top, first top, second top, third top before reversing all the way to the downside. Now we're also having, we're trying to form what they call an head and shoulder pattern. This is the left shoulder, this is the head. Maybe a potential right shoulder might actually occur around there. Either should be the case. This area marked with the black bar, it will be the neckline of the head and shoulder pattern. So head and shoulder pattern are bearish, reversal sharp, and they have the probability to reverse it, a pullback. They can reverse a bullish trend from being bullish to now being bearish, right? They can reverse a major trend from being bullish to being bearish. But in this case, we know this head and shoulder pattern just wants to reverse this guy at least to do a retest of here before actually continuing to the upside. So at this point, we are looking for what? Selling position to the downside. You as traders, we react to what the market is telling us. Like I've said it before, when the market wants to reverse, it tells us, it gives us a reversal sharp pattern, right? If you're patient enough, you align yourself with what the market is telling you, will make money from this. We make money when the market is going up, we make money when the market is also coming down. So what are we doing here? We just need this head and shoulder pattern to actually occur. We give it a couple of weeks or days, let the right shoulder occur. Once the right shoulder occurs, this becomes the neckline. We wait for a breakout, a retest of here. We don't sell at resistance. Please don't sell at resistance, neither do buy at support. Why so? Because support and resistance are easily manipulated. Support and resistance are easily manipulated. You can sell here. If I can speed up a little bit, hit your stop before starting rolling all the way to the downside. So wait for what the rules of engagement will be. Wait for a break below here. Wait for price to pull back for a retest of this level. Wait for a bounce. Wait for either a bearish candlestick bounce from here. Draw your counter trend line like this. Once price breaks above below our counter trend line, we can start selling all the way into this area. When price comes in here, I'll be locking in 70% of my position. Yes, you heard that right. I'll be locking in 70% of my position. Then I will push my stop loss below where I sold from. In anticipation, maybe we might come in for a touch of this trend line before actually continuing with the major trend, which is bullish. Okay, which is bullish before we start pushing all the way to the upside. So a breakout, the rules of engagement will be a break below here, a retest of here, a break of a counter trend line. You can start selling all the way down here. I'm not a day trader, I'm a swing trader, so I will trade for several weeks. So once price comes in here, I'll be locking out my first position. I'll push my stop loss past break here when anticipation we just roll all to the downside here. And once we come in here, I'll be entirely closing out my position entirely as profit, because this guy is here. If I zoom out properly, you can actually see this trend line is here, and it's possible we can actually bounce here to actually continue with the major trend, which is bullish. Pardon me, let me take all of this. I pride myself a cleaner shot. So just give it a couple of weeks of days, let the market decide what it wants to do. From the right shoulder, we can start selling. Now for all of you intraday traders that can't sit on your hands, that wants to constantly look for trades every now and then, I just feel there's a trade opportunity that you can actually jump on. But for me, I'm a more disciplined trader. I will allow the right shoulder to occur, right? But for you intraday traders, I'm going to give you guys a little bit of trade, because I know you guys who constantly wants to be in a trade every now and then. So this is even on the 4 hours time frame, the head of the head and shoulder pattern on the 4 hours time frame has formed another head and shoulder pattern. So this was the So let's go back to the daily. On the daily, all we can see on the daily is this is a left shoulder, this is a head, and we are waiting for the potential right shoulder to occur like this. All right, so we can start selling all the way to the downside. We are waiting for the potential right shoulder to form. Okay, so we can start looking for selling point to the downside. This head alone, the head alone of the head of the head and shoulder pattern on the daily time frame, if we go to the 4 hours time frame, this head has also formed another head and shoulder pattern. I don't want to get you guys confused. I hope you guys are getting what I'm saying. The head of the bigger, so this is the left shoulder head. The head of the head and shoulder pattern that wants to occur has formed a reversal sharp pattern known as the head and shoulder pattern on the 4 hours time frame. This is the left shoulder, this is the head, this is the right shoulder. So on the 4 hours time frame, you can actually see the head of the bigger head and shoulder pattern has also formed another head and shoulder pattern. So this was that head and shoulder pattern we saw on the daily time frame. This was the left shoulder, this is the head, and you can see the head of the head and shoulder pattern daily has also formed another head and shoulder pattern. Left shoulder, head, right shoulder. So all you in that intraday traders, wait for a pullback into the neckline. Once price comes in here, wait for you bounce, wait for you break of a counter trend line. Once price breaks up, once you have a 4 hours or a 1 hour candlestick break off your counter trailer, you can start selling all the way to the downside. One price comes in here, please lock in your first position, push your stop loss past break even in anticipation. We just roll all to the downside. We just roll to the downside because you can see somewhere around the price can come here, play around here a little bit, and start pushing all the way to the upside. All right, sharp patterns, regardless of the time frame they occur, they can be invalidated. From experience, I've come to understand nothing in the forex market is an exact science. Yes, 1 + 1 can be 2 today, tomorrow it can be 11, some other day can be freaking something else. All right, but the good thing is the market will always give us a sign. If this head and shoulder pattern was to be invalidated, the market will give us a sign. All right, so there's no point in trying to force the market or trying to beat yourself. Just go by the rule and you'll be fine. All right, so if an intraday trader wait for the pullback into this level, and it's also a supply level. The supply level is also around this level. I'm being honest, for all you supply traders, other block kind of a trader, supply levels, and so we might actually experience maybe a push like this to the upside, before actually pulling all the way to the downside. But either way, once price comes in here, draw your counter trend line at the waves. A break of your counter trend line, you can start selling all the way to the downside. But for me, being a more conservative trader, I'll be watching this very closely on the daily time frame. I need the right shoulder to form on the daily time frame, and once you start forming and break below here, I'll start selling all the way to the downside. So that's it for the S&P 500. Let's look at BTC.